Hello and welcome to our weekly financial report brought to you by Q Prime. And here is what you need to know for this week.
During the third week of Russia's invasion in Ukraine, statements by world leaders indicate no intention of de-escalation. From a Russian perspective, President Vladimir Putin compared Western sanctions to war on Saturday, as his forces continued their assault on Ukraine for the third week. The International Monetary Fund warned that the conflict would have a severe impact on the global economy. The US President Joe Biden banned the import of Russian oil, gas and coal on Tuesday in response to what he described as a vicious war of choice in Ukraine, but warned Americans that inflicting economic pain on Russia would inevitably result in higher domestic gas prices. According to Tuesday's GDP figures, the Japanese economy contracted by 0.2% in the fourth quarter of 2021, compared to the third quarter of the same year, when it came in at 1.1%, which is lower than the expected 1.4%. Job openings in the United States exceeded expectations in January, increasing by 11,263,000 new positions, which is slightly less than the December figure, which came in at 11,448,000 new positions after revision. Crude oil inventories fell by slightly less than 2 million barrels last week, causing oil prices to fall back to $105 per barrel. The European Central Bank decided on Thursday to maintain interest rates near 0%. The statement by the ECB, which left the door open to raising interest rates before the end of 2022, briefly boosted the euro before market sentiment turned negative. The week concluded with positive data from the United Kingdom, which showed the economy expanded by 10% on a year-over-year basis, exceeding both previous readings and expectations. Manufacturing production increased by 0.8% month-over-month in January. Monday's economic agenda is devoid of any economic data releases. Markets then turn their attention to the Reserve Bank of Australia's meeting minutes from Tuesday, the UK's February jobless claims, as well as the average earnings index, in addition to the German ZEW economic sentiment for March, are all going to be put under the microscope. Beginning Wednesday, markets will devote their full attention to monetary policy meetings at several central banks, beginning with the highly anticipated FOMC meeting and press conference. Markets have fully priced in a rate hike by the Federal Reserve, but questions about how many points to raise remain. A 50-point rate hike would likely strengthen the dollar and put additional pressure on stock markets. The Bank of England meets on Thursday following the FOMC meeting to decide on interest rates and monetary policy. Noting that it has already raised interest rates twice since the pandemic, markets are not pricing in any additional rate hikes, in light of the geopolitical tensions weighing on economic activity throughout Europe and the United Kingdom. Finally, the week should conclude with the Bank of Japan's interest rate decision. The Japanese yen has been gaining strength as a safe haven currency as a result of the ongoing war tensions and the risk-off sentiment.